Listings got a bump this week, but seasonal data says they're likely peaking. And we're watching the impact of rising interest rates. Will they crack the market at some point soon? That's what we're covering and more in this week's report. As always, thanks for taking a few minutes to join us for our weekly look at real-time market insights into our local housing market. My name is Scott Parker. I'm the Vice President of Sales and Marketing here at John Green Realtor, and I'll be taking you through this week's findings. So let's get after it with new listings first. A slight uptick, which we typically see in early August, but if historical trends hold, new listing activity will start to slowly decline from now through the end of the year. Go over to contract activity, a little down this week, but so were new listings last week. So the question is, we're looking to answer next week is, will we see a little bit of a pickup with the pickup that we saw in new listings? That'll tell us if demand is holding tight with supply and inventory levels. It's hard to say, but at some point, interest rates we feel like are going to have to become a factor. And here's why we say that. Rates peaked last October in the 7.2 range and then caught a little reprieve for the spring selling season. But with the continued positive economic news and the Fed showing no interest in really slowing rate hikes a ton, we have been slowly inching back up to those October 22 levels, which is approaching a 20-year high. At some point, even with suppressed inventory, rates have to take a toll on the market. And maybe we're starting to see that, but the market has been consistently resilient for better than a year now. So it's going to be interesting to watch and something we're going to continue to watch closely. Here's showing activity, and this is our best forward-looking indicator on demand because these are active buyers out there currently shopping and looking at homes. And it doesn't seem like the slight uptick in mortgage rates is having any major toll that we can see in this graph, still quite a bit above last year's showing activity. Here's off-market activity, which tracks those homes that were on the market and went off the market without finding a buyer. Inched up as the calendar turned to a new month, but nothing abnormal. Here's our market balance metrics. So 60% on this graph would be considered kind of normal balance in our marketplace. This number retracted a bit, and that was because we had slower contract activity and that little pop in new inventory. And here we had an off-market activity, so we can get the full picture of the market. And this was a little bit more stable week over week because of that slight uptick in off-market activity. So to recap really quickly, listings likely peak this week and will start their downward trend from here. And rates hitting 20-year highs haven't seemed to create any type of threshold for buyers yet, at least yet. We're going to be continuing to watch that closely in the upcoming weeks. So thanks as always for joining us, and we'll see you again here next week.